Before we begin, please note that the information provided in this video is for educational and informational purposes only. I am not a licensed financial advisor or insurance agent. The content shared here is based on extensive research and is intended to help you make informed decisions, but it should not be considered as financial or legal advice. Auto insurance rates and available discounts can vary significantly based on your individual circumstances, location, and the specific insurance provider. Always consult with a qualified professional and review the terms and conditions of any policy before making a final decision. Let me tell you about Sergeant Mike Thompson, a retired Army infantryman from North Carolina. For 12 straight years, Mike paid his auto insurance bill to the same big-name company. Never missed a payment. He was a loyal customer. He even had their military discount, which saved him a respectable, but not life-changing amount of money each month. He figured, hey, I served, they're giving me a discount. This must be the best deal I can get. He was wrong. Dead wrong. One rainy Tuesday, just out of curiosity, he decided to make a few phone calls after hearing a buddy talk about a different provider. He spent less than an hour on the phone. The result? He found a policy with the exact same coverage, the exact same that saved him over $700 a year. $700. That's not a one-time bonus. That's cash back in his pocket year after year after year. Mike's story isn't an exception. It's the rule. And that is the entire reason for this video. You served this country. You signed a blank check payable to the United States of America for an amount up to and including your life. In return, you've earned certain benefits, certain advantages. And one of the most overlooked, misunderstood, and frankly underutilized benefits is your right to exclusive savings on auto insurance. We're not talking about a few cents here and there. We're talking about the potential to save hundreds, and in some cases well over $1,000 annually. My mission over the next few minutes is to give you the playbook, the exact strategies, the secret questions, and the insider knowledge you need to stop overpaying and start keeping that hard-earned money where it belongs, in your wallet. We are going to expose the myths, navigate the jargon, and build a step-by-step action plan that you can use the second this video is over to potentially slash your insurance bill. So why does this happen? Why are so many of our nation's heroes, men and women like Mike, unknowingly leaving so much money on the table? The answer is complicated, but it boils down to three simple truths. First, insurance companies are not charities. They are massive, for-profit corporations. Their primary goal is to make money, and while they respect your service, they are not actively looking for ways to charge you less. It's up to you to know what to ask for. Second, loyalty is often punished, not rewarded. It sounds crazy, but it's a documented phenomenon in the insurance world called price optimization, or the loyalty tax. Companies sometimes identify long-term customers who are unlikely to shop around and slowly, incrementally, raise their rates over time, betting you won't notice or won't bother to leave. Your loyalty is costing you money. And third, the system is designed to be confusing. Liability, collision, comprehensive, uninsured motorist, PIP, MedPay. It's a sea of acronyms and legalese meant to overwhelm you. They count on you being too busy or too intimidated to dig into the details. This confusion leads to one of the biggest and most costly myths in the entire veteran community, and we need to shatter it right now. The myth is this: USAA is always the cheapest and best option for military members and veterans. Let me be crystal clear. USAA is a phenomenal organization. They have a legendary reputation for customer service, and for millions of veterans, they absolutely are the best choice. But they are not the only choice, and they are not always the cheapest. To assume they are, without ever checking the competition, is the single most expensive mistake you can make. The auto insurance market is fiercely competitive. Companies like Geico, Progressive, State Farm, and dozens of others are fighting for your business, and many of them have created aggressive, and sometimes even better, discount programs specifically to attract veterans. Your driving record, your vehicle, your zip code, your credit score, all of these factors create a unique risk profile. For one veteran in Florida, USAA might be the slam dunk winner. But for another veteran in Oregon with a different car and driving history, Geico or a smaller, regional insurer might beat USAA's price by a massive margin for the exact same coverage. Believing the myth without verifying it for yourself is like volunteering to overpay. It's like turning down free money. So before we dive into the specific discounts and tactics, we have to start with a fundamental mindset shift. You have to stop thinking of yourself as just a customer who pays a bill. You need to start thinking like an informed consumer who is in complete control. Your service gives you leverage. It makes you a highly desirable customer for these companies. They want your business. You are not asking for a handout, you are claiming a benefit you have earned. Being a savvy shopper isn't about being cheap. It's about being smart. It's about honoring your own hard work and sacrifice by not letting a single dollar go to waste. You need to abandon the idea that shopping for a better rate is disloyal. The only person you owe loyalty to in this transaction is yourself and your family. That $700 Mike Thompson saved? That's a family vacation. That's a huge chunk of the holiday budget. It's a massive boost to an emergency fund. It's financial freedom. This isn't just about saving money. It's about taking back control from a system that counts on your complacency. It's about applying the same discipline and strategic thinking you learned in the service to your own personal finances. You were trained to analyze a situation, identify an objective, and execute a plan to achieve it. Our objective here is simple: to secure the best possible auto insurance coverage at the absolute lowest possible price. And the plan to achieve that objective is exactly what this presentation is all about. We're going to arm you with the intelligence you need to go into any negotiation with an insurance company from a position of power. You'll know the right terms to use, the specific discounts to demand, and the red flags to watch out for. Think about it. You wouldn't go into a mission without a map and proper intel, right? So why would you navigate the complex world of insurance without them? For years, you've been navigating in the dark, paying what you were told to pay. Today we turn on the lights. We're going to break down the 3 distinct categories of military-related auto insurance discounts that exist. Most veterans only know about one of them. Understanding all 3 is the foundational first step to unlocking maximum savings. We will cover discounts based on your status, discounts based on your affiliations with veteran service organizations, and special discounts related to vehicle storage and driving habits that are unique to the military lifestyle. Getting this right is the difference between a small discount and a game-changing reduction in your monthly expenses. This is the inside information, the stuff the agents don't always volunteer. And it's the key to making sure you never overpay for auto insurance again. So let's start with the 80,000-pound gorilla in the room, the one name that comes to mind for almost every service member when they think about insurance: USAA. Now, I know what some of you are thinking. USAA? Of course I know about USAA. That's not a secret. And you're right, it's not a secret. But what is a secret? What most people, even some members, don't fully grasp is the why. Why is it so different? Who is actually eligible? And is it truly the best deal? Or is it just great marketing? The answers to these questions are the foundation of saving money. Because if you don't understand the bedrock, you can't build a solid financial house on top of it. To get it, you have to go back, way back, to 1922. Picture this. A group of 25 U.S. Army officers are sitting around a table in San Antonio, Texas. They've got a serious problem. They can't get auto insurance. Why? Because insurance companies at the time saw them as a high-risk group. They were transient, constantly moving from base to base, and the underwriters just didn't want the headache. They were essentially uninsurable. So, these 25 officers did what military people do best. They saw a problem, they adapted, and they overcame. They decided to insure each other. They pooled their own money, created their own company, and called it the United States Army Automobile Association. That company is what we now know as USAA. This origin story isn't just a nice piece of trivia. It is the absolute core of why USAA is fundamentally different from Geico, Progressive, or State Farm. Those companies are for-profit corporations. They have shareholders to please, stock prices to worry about, and their primary legal duty is to generate profit for those shareholders. USAA is not a corporation. It's what's known as a reciprocal inter-insurance exchange. That's a mouthful, I know, but all it really means is that it's owned by its members, the policyholders. You. When you join USAA, you're not just a customer. You are a part owner. There are no outside shareholders. The profits don't go to Wall Street. They either get reinvested back into the company to improve services and keep rates low, or they get returned to the members in the form of distributions or dividends. This structure isn't just a philosophical difference. It creates a completely different incentive system. Their goal isn't to squeeze every last penny from you for a shareholder. Their goal is to provide the best possible service at the lowest sustainable cost for their fellow members. That's a game changer. But here's the first major piece of inside information where people lose out: eligibility. The rules have expanded over the years, And millions of people who are eligible have absolutely no idea. They assume because they never served they can't join. But the legacy of service runs deep. Let's break it down crystal clear so you can check your own family tree. First, the most direct path. If you are currently serving in the U.S. Air Force, Army, Coast Guard, Marines, Navy, National Guard, or Reserves, you are eligible. If you are a veteran who was honorably discharged from any of these branches, you are eligible. This also includes cadets and midshipmen at U.S. service academies, in advanced ROTC, or on ROTC scholarship. Simple enough. This is the foundation. But now we get to the part that unlocks the door for so many families. The legacy eligibility. If your parent is or was a USAA member because of their military service, you are eligible. It doesn't matter if you ever served a day in your life. Because your mother or father served and joined USAA, you inherit that eligibility. And here's the kicker. It doesn't expire. You could be 50 years old and discover your dad, who served in Vietnam, had a USAA policy back in the day. You can call, verify his service, and you're in. Goes even further. Let's talk about spouses. If you are the spouse of a USAA member, you are eligible. But what about after a divorce? Generally, if you joined USAA while you were married, you can keep your membership even after the divorce. This is a huge point of confusion. And what about widows and widowers? If your deceased spouse was eligible, whether they were a member or not, you are eligible. You are considered part of the military family for life. Think about the power of this. It's a chain of eligibility. An officer who joined in 1950 passed eligibility to his children. Those children, who may never have served, can now pass eligibility to their spouses. It creates this incredible, multi-generational community. So many people I talk to say, "Oh, my grandfather was in the Navy, but I guess that doesn't count." It absolutely might. If your grandfather had USAA and he passed eligibility to your parent, and your parent joined, then you are eligible. You have to trace the membership link. The key is that an eligible parent must join USAA before their children can inherit that eligibility. It's a crucial step that's often missed. So if you're a veteran and a USAA member, one of the greatest financial gifts you can give your children is to get them their own USAA membership, even if it's just for a small renter's policy to lock in their eligibility for life. Okay, so now you know the why and the who. The next logical question is the big one. Are they actually cheaper? The honest answer is usually, but not always. For the vast majority of eligible members, especially those with a clean driving record, USAA will offer rates that are extremely difficult for other carriers to beat. Multiple independent studies from sources like U.S. News and World Report and NerdWallet consistently rank USAA as one of the, if not the cheapest national auto insurer. But I'm not going to sit here and tell you it's a 100% guarantee. Your individual rate depends on dozens of factors: your age, your vehicle, your driving history, your credit score, and most importantly, your state. Insurance is regulated at the state level, and the pricing in Florida is a different universe from the pricing in Idaho. This is why you must treat USAA as your benchmark, your starting point, your control group in a scientific experiment. Before you do anything else, if you are eligible, you get a quote from USAA. That number becomes your baseline. You write it down. Then and only then do you go shop around. Can Geico with its military discount beat it? Can Progressive? Maybe. In some specific cases for some specific driver profiles, another company might come in a few dollars lower. But you will never know if you're getting a good deal unless you compare it to the benchmark. And for the military community, USAA is that benchmark. But the savings don't just stop at the premium. This is the part that never shows up on a quote comparison website. Remember that origin story? That members first philosophy? It manifests in their customer service and claims process. When you call USAA, you're talking to someone who is trained to understand the unique challenges of military life. You say you have a PCS move coming up and they know exactly what that means. You mention a deployment, and they have specific policies and vehicle storage options ready to go. You don't have to explain the acronyms. You don't have to justify your lifestyle. They just get it. When you have a claim, that's when the rubber really meets the road. Ask anyone who's had to file a major claim. The difference between a good and a bad insurance company can be the difference between a minor inconvenience and a life-altering nightmare. USAA consistently ranks at the very top of J.D. Power's customer satisfaction surveys for claims handling. They're known for being fair, fast, and focused on helping the member, not fighting them. How much is that peace of mind worth? Is it worth $10 a month? For many, the answer is a resounding yes. You're not just buying a policy, you're buying into an ecosystem of support that was built by veterans for veterans. So, the first most critical step in this entire process is to definitively determine your USAA eligibility. Don't assume. Verify. Call them. Go to their website. Talk to your parents, your grandparents. Ask them if they ever served and if they ever had a policy. It's a 5-minute investigation that could unlock a lifetime of savings and superior service. This is your homework. Find out if you can join the club. But what if you can't? What if you've checked every branch of your family tree and there's no path in? Are you just out of luck, destined to pay more? Absolutely not. USAA might be the biggest player dedicated to the military, but they are not the only one. Several other major insurance carriers have developed specialized programs and deep discounts specifically to attract service members. They know the military community is full of responsible, reliable, and loyal customers, and they are fighting for your business. And in some cases, their targeted discounts can stack up in a way that might even beat the USAA benchmark. That's where we're going next. We're going to pull back the curtain on the other major players. We'll look at companies like Geico, which actually started with a similar model, and explore how their military discount really works. We'll dive into the niche providers and membership organizations that offer exclusive insurance perks you've likely never even heard of. Because even if you're a loyal USAA member, you owe it to yourself to know what the competition is offering. And if you're not eligible for USAA, this next part is your roadmap. It's how you find your own version of that USAA advantage and ensure you're getting the respect and the savings that your service has earned you. The landscape of military-friendly insurance is bigger than just one company, and we're about to explore the rest of the map. So let's start drawing that map. Our first stop is a name so familiar, you probably hear it in your sleep. A company represented by a charming British gecko, a gang of disgruntled cavemen, and a talking camel. I'm talking, of course, about Geico. Now, I know what some of you might be thinking. Geico? The company with the goofy commercials? How can they possibly compete with a military-first institution like USAA? It's a fair question. But to answer it, we have to rewind the clock, back to 1936. Long before the gecko, there was a man named Leo Goodwin Sr. He and his wife Lillian had a revolutionary idea. They saw a segment of the population that was statistically a safer bet for insurance. They were more stable, more responsible, and had steady employment. Who was this low-risk group? Government employees and commissioned military officers. The name Geico isn't just a random collection of letters. It's an acronym. Government, employees, insurance, company. It was founded from its very first day to serve federal workers and the military. That DNA, that original mission, is still embedded in the company's core, even if it's now wrapped in a much larger public-facing brand. They didn't just stumble into offering a military discount as a marketing gimmick. It's a foundational part of who they are. So what does this legacy mean for you today, as a veteran or active duty service member? It means their military savings program isn't just a single line item discount. It's a multi-layered system, and understanding those layers is the key to maximizing your savings. First, let's talk about the headline number. Geico offers a military discount of up to 15% on your total insurance premium. That's a significant number right off the bat. For many, that alone can mean hundreds of dollars a year back in your pocket. But this is where most people stop looking. They see the 15%, they check the box, and they move on. Doing that is like qualifying on the rifle range but never learning advanced marksmanship. You're leaving precision and money on the table. The real power in Geico's program comes from the situational discounts, specifically tailored to the unique realities of military life. Let's talk about deployment. You get your orders. You're heading overseas for 6, 9, maybe 12 months. Your car is going to be sitting in a garage on base or at your parents' house. It's not being driven. Why on earth should you pay a full insurance premium for it? Geico has a specific deployment discount. If you store your vehicle in an approved location, you can significantly reduce or even suspend certain coverages, like collision, while keeping the comprehensive coverage that protects it from theft, vandalism, or a tree falling on it. This can slash your premium by a massive amount, in some cases up to 90%, for the duration of your deployment. Think about that. A bill that might be $150 a month could drop to $15. Over a year-long deployment, that's over $1,600 in savings. That's a round-trip ticket home for the holidays, or a serious down payment on a new bike when you get back. But they take it a step further. Geico is one of the few major insurers that offers what's called an emergency deployment discount. This is crucial. Let's say you're not on a standard deployment cycle. You get sudden orders. You're part of an imminent danger pay area operation. If you're deployed to one of these designated zones, Geico can provide a discount that goes above and beyond their standard military savings. It's a recognition that your service just went into overdrive, and your financial obligations shouldn't be an added stressor. This isn't something they always advertise in bold letters on their homepage. It's something you or a family member acting on your behalf often need to specifically ask for. It requires submitting your orders as proof, but the payoff is substantial. It's a prime example of why you can't just fill out an online form and expect the best rate. You have to engage, ask the right questions, and know what you're entitled to. Beyond these deployment-specific savings, Geico has another powerful tool in its arsenal: affinity discounts through military organizations. They have established partnerships with dozens of groups. Are you a member of the Association of the United States Army, or AUSA? That's a discount. The Armed Forces Benefit Association, AFBA? That's a discount. The Navy League of the United States? You guessed it, that's another potential discount. These can often be stacked on top of the general military discount. We're talking about peeling back layer after layer of savings. It's about creating a custom-fit policy that reflects not just your service, but your ongoing affiliation with the military community. This is where the Geico experience differs from a company like USAA. With USAA, your eligibility is your golden ticket. It unlocks everything. With Geico, it's more like a scavenger hunt. Your veteran status is the map, but you still have to find the treasure. You have to tell them you're a member of the AUSA. You have to call them when you get deployment orders. The system is designed to reward the proactive, informed consumer. The person who watches a video like this one. Let's put this into a real-world scenario. Imagine Sergeant Miller, recently separated after 8 years in the Army. He's moving to a new state for a civilian job. His whole career he's had USAA and they've been great. But for the first time he's a free agent. He decides to shop around. He goes to Geico's website, plugs in his information and gets a quote. It's good, maybe a little better than his renewal rate, but not life-changing. He almost clicks away. But then he remembers he's still a member of the Association of the United States Army. He calls the 800 number instead of finishing the online form. He gets a representative on the line and says, "Hi, I'm a U.S. Army veteran, and I'm also a member of AUSA. I'm looking for the best possible rate." Immediately, the conversation changes. The agent confirms his service, applies the 15% military discount, and then adds the AUSA member discount on top of it. The price drops again. The agent, now knowing he's talking to a veteran, might also be prompted to ask about driving habits, the security of his new apartment's parking garage, and other factors that could trigger even more savings. Sergeant Miller ends up with a premium that's 30% lower than his original online quote, all because he made one phone call and knew the right two things to say: "I'm a veteran," and "I'm a member of this organization." This is the Geico playbook. They have the discounts. They have the infrastructure. Their military assistance team is staffed with veterans who understand the language and the lifestyle. They get it. But because they also serve tens of millions of civilian customers, you have to raise your hand and identify yourself. You have to walk through the door with the right credentials and ask for the right person. This applies to every branch and every status. National Guard and reservists, this is especially important for you. Your status can change from month to month. One weekend you're drilling, the next you're activated for state emergency, and 6 months later you could be mobilized for a federal deployment. Geico's system is flexible enough to handle that. You can adjust your policy as your duty status changes, ensuring you're not paying for high-mileage coverage when your vehicle is sitting idle because you've been activated. So, while Geico may be famous for its humor, its commitment to the military community is one of the most serious and valuable parts of its business. They offer a powerful alternative, a place where your military background gives you access to a premium suite of discounts within one of the world's largest insurance providers. It requires a bit more legwork from you, the consumer. You have to know what to ask for. But for the veteran who is willing to make that extra call, to ask about that extra affiliation, the savings can be immense. They've built a world-class program, but they hand you the keys and expect you to unlock the best doors. But Geico's approach, as solid as it is, isn't the only game in town. There's another giant, one known for its bright blue logo and a famously perky spokesperson, that has a completely different strategy for winning over veterans. And their secret weapon isn't just a list of discounts. It's a dedicated, specialized team that acts as your personal concierge through the entire insurance process. They've decided that the ultimate sign of respect isn't just saving you money, but also saving you time and stress. And how they do it might just surprise you. It starts with a fundamental shift in perspective. Most insurance companies see you as a policy number, a data point in an algorithm. This special team sees a person with a story, a service record, and a unique set of needs. They operate on a principle they call mission-focused support. Just like in the military, where every action is driven by the mission objective, their entire objective is to secure the best possible outcome for you, the veteran. They aren't just selling insurance. They're executing a mission on your behalf. So, how does it work in practice? Let's imagine a real-world scenario. Let's talk about Sergeant Frank Miller. Frank just retired after 22 years in the Army. He's moved his family to a small town in North Carolina, bought a used Ford F-150, and is trying to get his civilian life in order. First on his list, car insurance. He goes online and within minutes he's drowning. He's hit with a tidal wave of confusing terms: comprehensive, collision, liability limits, personal injury protection, uninsured motorist coverage. Every website he visits asks for the same information over and over again, a dozen different times. His phone starts ringing off the hook with calls from aggressive agents who don't listen, who just want to push their one-size-fits-all policy on him. Frank spent 2 decades leading troops in high-stakes environments, making critical decisions under pressure. Yet, sitting at his kitchen table, he feels completely out of his depth, frustrated, and frankly a little disrespected. This whole process feels like a waste of his time he'd rather be spending teaching his son how to fish in the nearby lake. Then, through a veterans forum, he hears about this concierge-style service. He's skeptical. Sounds too good to be true. But he's at his wit's end, so he makes the call. The person who answers isn't a call center drone reading from a script. Her name is Amanda, and she introduces herself as his veteran advocate. The first thing she says is, "Sergeant Miller, thank you for your service. My dad was a Marine. I get it. Let's make this easy for you. I'm going to ask you some questions once, and then I'll do all the work." The conversation is different. Amanda doesn't start with his vehicle identification number. She starts with him. She asks about his 22 years in the service where he was stationed, what his new life in North Carolina looks like. She asks about his driving habits now that he's retired. Does he have a long commute? Nope, he's mostly using the truck for local errands and weekend fishing trips. That's a key detail. She asks if he's a member of any veteran organizations like the VFW or the American Legion. He is. Another key detail. She asks about the safety features on his F-150. Does it have anti-lock brakes? An anti-theft system? He checks. It does. More key details. In one 15-minute respectful conversation, Amanda builds a complete profile of Sergeant Miller's life and needs. A profile that those soulless online forms could never capture. Then Amanda tells him, "All right, Sergeant. I have everything I need. My mission now is to go out and find you the best possible coverage at the lowest possible rate. It'll take me about 24 hours to scan our entire network of A-rated carriers. I will personally handle the negotiations. You go enjoy your day. I'll call you tomorrow at the same time with your options." Frank hangs up the phone, stunned. No pressure. No confusing jargon. No being forced to make a decision on the spot. He actually feels relieved. He feels heard. The next day, just as promised, Amanda calls back. She doesn't just give him one quote. She says, "Sergeant Miller, I've analyzed 27 different policies for you. I've eliminated 24 of them because they either had insufficient coverage or were simply overpriced. I have your top 3 options right here. Let me walk you through them." She explains it in plain English. Option A is from a national carrier and saves him the most money, a staggering 43% less than the best quote he found online. Why? Because Amanda stacked his discounts. She applied the standard military discount, but then she added a low mileage discount because he's retired. She added an affiliation discount for his VFW membership. She added a vehicle safety discount, a multi-policy discount because she found a carrier that would give him a great deal by bundling his renter's insurance, and a paid-in-full discount he didn't even know existed. Option B was slightly more expensive, but it came with enhanced roadside assistance and a disappearing deductible, which was perfect for someone living in a more rural area. Option C had a unique feature: new car replacement coverage, which wasn't relevant for his used truck, but Amanda explained it anyway. just so he was fully informed. She laid it all out, the pros and cons of each, like a perfect mission briefing. There was no sales pitch. The choice was entirely his. She had simply completed her mission: to gather the intelligence, analyze the options, and present a clear, actionable plan. For the first time in this whole process, Sergeant Miller felt in command. He felt respected. This story isn't an exception. It's the rule. It's the system. This concierge team acts as your personal intelligence officer. In the confusing world of insurance, they are masters of a craft called discount optimization. Most people know about the military discount, but that's just the tip of the iceberg. These advocates are trained to dig for every single cent you're entitled to. Think about it. Did you know that some insurers offer a discount simply for having a college degree? Or for being a federal employee before or after your service? Or for completing an approved defensive driving course, which you can often do online in a few hours for less than $20, saving you hundreds over the life of your policy? They have access to tools the public doesn't. Imagine an internal software platform that functions like a powerful market scanner. They input your unique veteran profile, your service history, your driving record, your vehicle, your location, and this system cross-references it against the complex, ever-changing discount matrices of dozens of top insurance carriers simultaneously. It's looking for the perfect alignment, the one carrier whose specific algorithm will give you, a veteran with your exact profile, the absolute best rate. It's a level of analysis that would take you weeks to do on your own, and they do it in minutes. But their mission doesn't end when you sign the policy. That's where the true meaning of advocate comes in. Let's say 6 months down the road, someone dings Sergeant Miller's F-150 in the parking lot of the hardware store and drives off. A hit and run. He's frustrated. He has to file a claim. Instead of calling a 1-800 number and getting lost in a phone tree, he calls Amanda, his direct point of contact. She walks him through the entire claims process. She helps him file the report, advises him on which body shops in his area are reputable, and most importantly, she liaises with the insurance company's claims adjuster on his behalf. She makes sure the process is fair, fast, and that he gets every dollar he's owed to get his truck fixed right. She's his ally, his advocate, his foxhole buddy in the battle against bureaucracy. This entire structure is built on a single powerful idea: that your service has earned you more than just a token discount. It has earned you a service in return, a service that honors your time, respects your intelligence, and protects your wallet. It transforms the frustrating adversarial process of buying car insurance into a simple, supportive, and dignified experience. It's about replacing the stress of the unknown with the confidence of having a dedicated expert on your side. But this system, as powerful as it is, can't protect you from everything. There are still pitfalls, hidden clauses in the fine print that can turn a great deal into a financial nightmare. Even with the best advocate and the biggest discounts, there is one critical mistake that countless veterans make when finalizing their policy: a single checkbox that, if ticked incorrectly, can invalidate certain coverages and leave you dangerously exposed when you need it most. And that's exactly what we're going to uncover next. This single checkbox, often labeled something as innocent as primary use of vehicle, is a financial landmine. And it all comes down to a fundamental misunderstanding of one word: business. Let me tell you about a Marine sergeant, we'll call him David. After 2 tours, David came home and poured his discipline and passion into a new mission: custom woodworking. He was brilliant at it. He started a small business out of his garage, taking orders online, building beautiful, handcrafted furniture. His pride and joy, besides his family, was his Ford F-150. It was his daily driver, his family vehicle, and a few times a week his delivery truck. When David shopped for auto insurance online, he flew through the questions. He was smart, detail-oriented, a guy who reads the manual. But when he got to the question, how will you primarily use this vehicle? He saw the options: commuting, pleasure, farm, business. He paused for a second. To him, business use meant a work van with a logo on the side, a fleet vehicle, something a big company owned. His truck? That was his personal truck. He just happened to use it for his little side hustle now and then. So he checked commuting. The premium was reasonable. He saved the policy, printed his insurance cards, and didn't think about it again. He was covered. Or so he thought. 6 months later, he was delivering a $1,000 coffee table to a client across town. He was stopped at a red light when a driver, texting and not paying attention, slammed into the back of his truck. The damage wasn't catastrophic, but it was significant. The bumper was crumpled, the tailgate was smashed, and the custom coffee table in the bed was splintered beyond repair. David did everything right. He exchanged information, he took pictures, he filed a police report. He called his insurance company, confident they'd take care of it. The initial conversation was great. The agent was friendly, sympathetic. But then came the question, where were you headed at the time of the accident? David, being an honest guy, told the truth. I was delivering a piece of furniture for my business. The friendly tone on the other end of the line changed. It became procedural. A few days later, he got the official letter in the mail, the kind with the formal letterhead that makes your stomach sink. His claim was denied. All of it. The repairs to his truck, the $1,000 replacement cost for the client's table, everything. The reason cited was material misrepresentation. By checking commuting instead of business, he had, in the eyes of the insurer, voided his policy at the moment of the crash. He was on his own, facing thousands in repairs and a furious client, all because of a single misunderstood checkbox. David's story is heartbreakingly common. The line between personal and business use has become incredibly blurred in the age of the gig economy, and insurers are cracking down. The brutal truth is this: if you are using your personal vehicle to earn money in almost any capacity, your standard personal auto policy may not cover you. It's not a gray area. It's a black and white exclusion buried deep in the fine print of your policy contract. So what exactly constitutes business use? It's far broader than you think. The obvious ones are driving for Uber or Lyft, or delivering for DoorDash or Grubhub. Most drivers know they need special rideshare insurance for that. But the trap David fell into is the one that snares countless veterans who are entrepreneurial by nature. It includes delivering any kind of goods for sale. This could be furniture from your woodworking shop, crafts for your Etsy store, or even just selling items on Facebook Marketplace and offering delivery. If money is changing hands and you're using your car to complete the transaction, that's business use. It includes using your vehicle as a tool of your trade. Are you a self-employed handyman, plumber, or electrician driving from job to job with your tools in the back? That's business use. Are you a real estate agent driving clients to see properties? Business use. A photographer driving to a paid shoot? Business use. Even something as simple as a part-time pizza delivery job on the weekends can invalidate your entire personal policy. The reason is simple: risk. From an insurer's perspective, a vehicle used for business is on the road more often, during busier times, in unfamiliar areas, and is potentially carrying valuable goods or paying passengers. The risk of an accident is statistically much higher than it is for someone just commuting to the same office every day. When you check that personal use box, you are attesting that your risk profile is low. When they discover you're using it for business, they argue that you misrepresented the risk they agreed to cover. So how do you protect yourself from David's nightmare scenario? You have two primary options, and they are not nearly as expensive as you might fear. The first, for light or occasional business use, is to add a business use endorsement or rider to your personal auto policy. For a relatively small increase in your premium, this endorsement officially acknowledges that you sometimes use your vehicle for work and ensures you're covered when you do. You must be completely transparent with your agent about what you're doing. Tell them everything. They can then determine if a simple endorsement is enough. The second option, for more intensive work, is a dedicated commercial auto policy. This is essential if you're using a vehicle exclusively for work, if it's a heavy-duty truck, if you're hauling specific equipment, or if you have employees who might also drive the vehicle. Commercial policies offer higher liability limits, which is critical if you cause an accident while on the job, and can also include coverage for your tools and equipment inside the vehicle, something a personal policy will never touch. The cost difference can be surprisingly small when you weigh it against the catastrophic risk of a denied claim. Think about it. Paying an extra $20 or $30 a month for a business use endorsement is nothing compared to the $10,000 David was suddenly on the hook for. It's the difference between a small, predictable business expense and a sudden, life-altering financial disaster. Before you renew your policy, before you even start your next side project, I want you to pull out your current insurance declaration page. Find the section on vehicle use. If it says personal, pleasure, or commute, and you have ever used that vehicle to make a single dollar, you need to make a phone call to your agent today. Don't email, don't use the online chatbot. Speak to a human being and lay it all out on the table. This is one of those 5-minute conversations that can literally save you from financial ruin. This single checkbox is a perfect example of how the default, cheapest option isn't always the safest. It's a trap hidden in plain sight. But it's not the only one. There's another, even more critical coverage that many people, especially veterans, misunderstand or undervalue. It's a type of coverage that doesn't protect you from the damage you cause, but from the immense financial danger posed by millions of other drivers on the road. It has a direct and profound connection to your reliance on VA healthcare, and getting it wrong can be the difference between a full recovery and a lifetime of medical debt. And that's the critical piece of the puzzle we're putting together next. Let's start with a fundamental misunderstanding that costs veterans tens, sometimes hundreds of thousands of dollars after a car accident. It's a belief so common, so deeply ingrained, that most veterans never even think to question it. The belief is this: if I get hurt in a car wreck, the VA will take care of me. My health care is covered. On the surface, that statement is true. The VA will treat your service-connected and non-service-connected injuries. They will provide excellent care. But the financial reality of who pays for that care is a ticking time bomb hidden in the fine print of federal law. To understand this, we need to talk about two small, often ignored lines on your auto insurance policy: medical payments coverage, or MedPay, and personal injury protection, or PIP. You've probably seen them. Maybe your agent said you didn't need them because you have VA benefits. Maybe you declined them to save $20 a month. I am telling you right now, for a veteran who relies on VA healthcare, declining these coverages can be one of the most catastrophic financial mistakes you can possibly make. It's like willingly deactivating your body armor before a firefight. Here's why. The Department of Veterans Affairs is not a primary health insurance company in the traditional sense. When you are injured in an accident caused by someone else, the VA has a federal right to be reimbursed for the cost of your medical care. This is called the Federal Medical Care Recovery Act. In simple terms, the VA will treat you, and then they will go after the at-fault party's insurance company to get their money back. They place what's called a lien on any settlement you might receive. And here's the critical part: the VA gets paid first. Before you see a single dollar for your pain and suffering, your lost wages, or your future medical needs, the VA's bill must be settled. Let's walk through a scenario. We'll call him Sergeant Thompson. He's a combat vet, 100% service-connected, relies entirely on the VA for his health care. He's driving home one afternoon when someone runs a red light and T-bones his truck. The other driver is clearly at fault. Sergeant Thompson suffers a broken leg, a concussion, and 3 cracked ribs. He's taken to the VA hospital, where he spends a week and undergoes surgery. The total cost of his medical care comes to $50,000. Now, Sergeant Thompson, thinking he's in the clear, files a claim against the at-fault driver's insurance. He discovers that driver only carried the state minimum liability coverage, which is $25,000. It's not much, but it's something. He thinks, okay, I'll get that 25 grand. It'll help me while I'm out of work. But then the letter arrives. It's from the VA. They've placed a $50,000 lien on his case. Remember, the VA gets paid first. The at-fault driver's insurance company cuts a check for their full policy limit, $25,000, and sends it directly to the U.S. Treasury to partially satisfy the VA's lien. Let's pause and look at where Sergeant Thompson stands. He has received $0. Nothing. The entire settlement from the person who hit him went to the VA. But it gets worse. He still has a remaining medical bill of $25,000 that the VA is legally obligated to try and collect. He's out of work, in pain, and now he's not only broke, but he's also in debt for medical care he thought was free. He got nothing for his totaled truck, nothing for his lost wages, nothing for the permanent limp he now has. He is financially ruined, all because he believed the VA had his back. This isn't a scare tactic. This happens every single day in America. The system, while designed to prevent taxpayers from footing the bill for a third party's negligence, inadvertently creates a devastating financial trap specifically for veterans. Now let's rewind the clock. Let's put Sergeant Thompson back in that same accident, but with one tiny change to his auto insurance policy. Let's say a year ago, he watched a video just like this one. He called his agent and added $50,000 of medical payments coverage, or MedPay, to his policy. It cost him about the price of a cup of coffee each week. The accident happens. The injuries are the same. The VA care costs the same $50,000. But this time, the process is completely different. MedPay is what's called no-fault coverage. It pays for your medical expenses regardless of who caused the accident. More importantly, it is a primary payer. So when the VA goes to collect for Sergeant Thompson's care, his own auto insurance policy steps up first. His $50,000 in MedPay coverage pays the VA's $50,000 bill in full. The lien is satisfied. It's gone. Now, what happens to the $25,000 settlement from the at-fault driver? It goes directly into Sergeant Thompson's pocket. It's his to use for lost wages for pain and suffering for a down payment on a new truck. He is made whole. That one small, inexpensive line item on his insurance policy acted as a financial shield, protecting his settlement and his future from the VA's recovery process. This is the power of MedPay. For veterans, it's not just extra medical coverage. It is a settlement protection plan. It's a firewall between the VA's legal right to reimbursement and your financial well-being. Now, some of you live in what are called no-fault states. In those states, you're required to carry personal injury protection or PIP. PIP works in a similar way to MedPay, but it's often more comprehensive, covering things like lost wages and rehabilitation costs in addition to medical bills. The principle is exactly the same. Your PIP coverage pays your medical bills first, satisfying the VA's claim and preserving any settlement from the at-fault party for you. Whether you have access to MedPay or are required to have PIP depends entirely on your state, but the strategic importance for a veteran is identical. You might be thinking, but wouldn't my private health insurance do the same thing? Yes, but with a few crucial differences. Private insurers also have a right to be reimbursed, called subrogation. However, the VA's right to recovery is backed by the full force of the federal government, making it often less negotiable and more aggressive. Furthermore, many veterans, especially those who are 100% disabled or retired, have dropped private health insurance entirely to rely on the VA and TRICARE. For this massive group, understanding the MedPay/PIP shield isn't just a good idea. It is an absolute necessity. You served your country. You earned your VA benefits. You should never be in a position where the very system designed to support you becomes the instrument of your financial distress after an accident that wasn't even your fault. Having the right auto insurance coverage prevents this. It ensures that the money meant to compensate you for your suffering actually reaches you. It allows the VA to be reimbursed without gutting your financial recovery. It's the one tool that lets both systems work as intended, protecting you in the process. So the next time you look at your auto insurance declaration page, don't see MedPay or PIP as a redundant expense. See it for what it truly is: a specialized tool, a veteran-specific financial defense mechanism. It's the buffer zone that keeps an unfortunate accident from spiraling into a life-altering financial disaster. The question now isn't if you need it, but how much you need and how to get it without overpaying. Because there are specific ways to structure this coverage and little-known affiliations you can leverage to get this ironclad protection for pennies on the dollar. And that's exactly where we're going next. So let's start with the shield itself. Uninsured and underinsured motorist coverage. This isn't just an add-on. It's your personal financial bodyguard. Think about it. You can be the safest driver in the world, a professional who spent years maneuvering multi-ton military vehicles through chaos. But none of that matters when a 19-year-old texting in a beat-up sedan runs a red light and plows into you. If they have no insurance or the state minimum of, say, $25,000, who pays for your $500,000 medical bills, your lost income, your lifelong physical therapy? You do, unless you have this shield. But here's the secret the pros know. It's not just about having this coverage, it's about how you structure it. And the magic word is stacking. Now, not every state allows this, but if yours does, it is one of the single most powerful, cost-effective tools in your entire insurance arsenal. Stacking, in simple terms, means you can combine the uninsured motorist coverage limits for each vehicle on your policy. Let's make this real. Meet Sergeant Miller. He's got 2 cars on his policy, a truck and a sedan. He has $100,000 of uninsured motorist coverage on each. Without stacking, if he gets hit by an uninsured driver while in his truck, he has access to $100,000. Period. The coverage on his sedan back at home doesn't matter. But with stacking, everything changes. With a stacked policy, he can combine the limits. That $100,000 from the truck and the $100,000 from the sedan are now added together. Suddenly, he's protected by a $200,000 shield, even though he was only driving one of the cars. If he had 3 cars, it could be $300,000. It multiplies your protection. And the cost to add this feature? It's almost criminally low. You might pay a few extra dollars a month to literally double or triple the financial armor protecting your family. Why is it so cheap? Because the insurance company knows you can't crash all your cars at once. The odds of them having to pay out on a stacked claim are still low, But for you, the individual who suffers that one catastrophic event, it is the difference between a full recovery and financial ruin. So your first action item is to call your agent and ask 2 simple questions. 1. Does our state allow for stacked uninsured and underinsured motorist coverage? And 2. If it does, how much would it cost to add it to my policy? The answer will likely shock you in the best way possible. Now let's talk about leveraging your identity. This goes far beyond the standard 5 or 10% veteran discount that most companies advertise. That's just the surface level. We're going deeper. We're talking about tapping into the collective power of military-affiliated groups to unlock deals the general public will never even see. The 800-pound gorilla in the room is, of course, USAA. And I know what some of you are thinking. I checked them once, they weren't the cheapest. And that might be true for a bare-bones state minimum policy. But that's like comparing a standard-issue M4 to a custom-built rifle. They might look similar, but they perform very, very differently when it counts. The power of an organization like USAA, Navy Federal, or PenFed isn't just in the sticker price of the premium. Their entire business model is built on serving a closed, lower-risk group, the military community and their families. When an insurer only has to cover a population that is, on average, more responsible, more disciplined, and more financially stable, their risk goes way down. And when their risk goes down, they can offer things other companies can't. First, there's the potential for subscriber savings accounts or annual dividends. For years, many USAA members have received a check back, a refund on their premiums because the group as a whole had fewer claims than expected. Your standard insurance company doesn't do that. Their profits go to Wall Street. A military-focused insurer's profits often go back to the members. Second, they speak your language. You don't have to explain what a PCS is, or why your car will be in storage for a year during a deployment. They have policies and procedures built specifically for the chaos of military life. That's a value you can't measure in dollars until you desperately need it. But this is where we go from the well-known to the truly exclusive. Let's say you've checked the big military-affiliated insurers. Your work isn't done. Now, you need to take an inventory of your other affiliations. Are you a member of the VFW, the American Legion, the Marine Corps League, the Association of the U.S. Army? These organizations are massive. They have millions of members, and they use that collective bargaining power to negotiate special deals with major insurance carriers, deals that aren't advertised on TV. A giant like Progressive or Geico might have a dedicated, hidden portal just for VFW members, offering an additional group discount that stacks right on top of your veteran discount. Here's the strategy. Go to the website of every single veteran service organization you belong to. Find the member benefits or discounts section. You are going to be amazed at what you find. You might see a partnership with a major insurer that offers another 5, 8, even 10% off. I talked to a chief petty officer from San Diego who did this. He was a member of a smaller niche organization for Navy technicians. Buried on their outdated website was a link to a member benefits portal with a major national carrier. He clicked it, entered his membership number, and got a quote that was $400 a year cheaper than going to that same carrier's public website. Same company, same coverage, but because he entered through the secret handshake of his association, he unlocked a price no one else could get. That's $400 back in his pocket every single year, for a membership he already had. This is what we call the force multiplier effect. You're not just relying on one tactic, you're combining them to create an overwhelming advantage. So picture this. You call a military-focused insurer like USAA. You don't just ask for a quote. You ask for a quote with stacked uninsured motorist coverage. Or you go to your American Legion member portal, access their private discount with another carrier, and then you tell that agent that you want the quote to include stacking. You are now building a custom policy. You're using your veteran status not just for a token discount, but to fundamentally change the structure of your coverage and the price you pay for it. You are leveraging group power and insider knowledge to get ironclad protection for a fraction of the cost. This isn't just about saving money. It's about taking control and ensuring that the discipline and foresight you learned in the service is applied to protecting your family's financial future. You now know how to build the foundational structure of your policy and how to use your affiliations to get a price the general public can't. You've built the armored chassis, but now we have to bolt on the armor plates. I'm talking about the individual discounts. Most people know about 2 or 3, like a good driver or multi-policy discount, but there are over 20 you could be eligible for. And one of them, a little-known discount related to something as simple as your garaging address versus your mailing address, is so frequently overlooked that it leaves hundreds of dollars on the table for thousands of veterans, especially those who move frequently. And that's the first secret we're exposing in the next part. So let's break it down. Your garaging address is not a suggestion. It's not just where you get your mail. It is the single most important location-based factor on your auto insurance policy. It is the literal physical street address where your vehicle rests its tires at night. Insurance companies use this zip code to calculate your risk. They have decades of data on every single zip code in America. Data on theft rates, vandalism, collision frequency, weather patterns, and even the cost of auto repairs in that specific area. Now, think about the life of a service member. You might maintain a permanent mailing address at your parents' house in a major city like Chicago or Los Angeles for stability. You get your important mail there, you're registered to vote there. But you're currently stationed at Fort Bragg, North Carolina, or Naval Base San Diego, or a quiet Air Force base in the middle of Nebraska. Your car is parked on a secure military installation, or in a quiet suburban neighborhood miles away from that high-cost, high-risk urban zip code you use for your mail. If your insurer is using your Chicago mailing address to rate your policy, you are paying a Chicago-sized premium. You're paying for the risk of city traffic, higher crime rates, and congested streets, even though your car is actually sitting safely inside the gates of a military base hundreds of miles away. The difference is in a few bucks. We're talking about a potential savings of 20-30, sometimes over 50%, just by making a 5-minute phone call and telling your insurer, "My mailing address is this, but my primary garaging address is this." Be specific. Give them the address for your barracks, your on-base housing, or your off-base apartment. With every PCS move, this should be one of the first calls you make, right after setting up utilities. It is a guaranteed rate adjustment, and for most of you it will be a significant one in your favor. But your location is just one piece of the puzzle. The second secret is about who you are, not just where you are. And it's something that changes and evolves throughout your entire military career. I'm talking about your rank. When you first enlisted at 18 or 19 years old, you were, in the eyes of an insurance underwriter, a very high risk. Young, inexperienced, statistically more likely to take risks. Your premium reflected that. But what happened 2 years later? You made it for it. A few years after that, you put on sergeant stripes. Maybe you became a staff sergeant, a gunny, or a chief. Maybe you commissioned and you're now a captain or a major. Each one of those promotions is a signal of increased maturity, responsibility, and stability. Insurance companies know this. Their data shows clear as day that an E6 with a family is a much safer driver than a brand new E1. A field-grade officer is statistically one of the safest drivers on the road. Yet, how many of you called your insurance company after your promotion ceremony? Most veterans set their policy and forget it. They're still being partially rated on the risk profile of the 19-year-old kid they used to be, not the 28-year-old NCO they are today. This is a life event. Just like getting married or buying a home, a promotion should trigger an immediate call to your insurance agent. Say these words: "I'd like to update my profile. I've recently been promoted." This forces them to reevaluate your risk profile. It shows a progression of responsibility. While it may not be listed as an official discount on their website, behind the scenes in the complex algorithms that calculate your rate, this matters. It's a powerful data point that proves you are a lower risk today than you were yesterday. And a lower risk always means a lower premium. Don't leave that money on the table. You earned that rank, you deserve the financial respect that comes with it. Okay, so we've corrected where you live and we've updated who you are. The third secret is potentially the biggest of them all because it's about how you actually use your vehicle. And for veterans, this is wildly different from the civilian population. Let's talk about annual mileage and vehicle usage. When you get an insurance quote, they ask you, how many miles do you drive per year? And what do you use the car for? The standard answers are 12,000 miles and commuting to work. For 90% of civilians, that's probably close enough. For a military member, it's often completely wrong. First, the commute. If you live on base, what is your commute? Is it a 2-minute drive to the company headquarters? Do you walk to the flight line? If you live just off base, are you driving 20 miles in rush hour traffic or 5 miles against it? If your actual annual mileage is closer to 6,000 miles because you live so close to where you work, you are being overcharged by a factor of 2. You're paying for a risk you never take. You need to call your insurer and demand they change your usage from commute to pleasure use and lower your annual mileage estimate to a realistic number. This alone can save you 10 to 15% instantly. But here's the real game changer: deployments. When you deploy for 6, 9, or 12 months, what happens to your car? It sits. It sits in a garage, a storage unit, or your parents' driveway. It is not on the road, cannot get into a collision, it cannot get a speeding ticket, poses virtually zero liability risk. So why in the world are you paying a full coverage premium for a car that's just collecting dust? This is one of the most missed savings opportunities in the entire military community. Before you deploy, you must call your insurance provider and tell them you are putting the vehicle into long-term storage due to military deployment. You can request to suspend your collision and liability coverage and maintain only your comprehensive coverage. Comprehensive is the part that covers you for non-driving events, theft, vandalism, fire, a tree falling on it. It's incredibly cheap. By suspending the expensive parts of your policy, collision and liability, you can slash your bill by as much as 90% while you're gone. Instead of paying, say, $150 a month, you might pay just $15 a month. Over a 9-month deployment, that's over $1,000 in savings. It's your money. All it takes is one phone call before you leave and one phone call when you get back to reinstate your full coverage. It is simple, it is easy, and it is a financial mistake not to do it. So let's recap these secrets. We've corrected your garaging address to reflect your actual, low-risk location. We've updated your profile to reflect the responsibility and maturity of your current rank. And we've adjusted your mileage and usage to match your real-world driving habits, especially accounting for deployments. By tackling just these 3 areas, we've already uncovered the potential for massive, recurring savings that most service members are leaving on the table right now. But everything we've talked about so far has been about correcting data points and aligning your policy with your reality. The biggest savings of all aren't about corrections. They're about leveraging specific, often unadvertised veteran-centric programs and affiliations that insurance companies have, but that they pray you never find out about. These are the deep-level discounts that go far beyond a simple military discount. In the next part, we stop fixing the old and start building the new. We are going to expose the exact organizations you need to join, and the precise phrases you need to use with your agent to unlock a tier of savings that is almost exclusively reserved for the military community. Alright, let's get this mission started. The first layer of this strategy is about establishing your identity, not just as a veteran, but as a member of a trusted, low-risk community. Insurance is a game of statistics, and right now you're going to rig the game in your favor. You do this by joining specific organizations that insurers respect. These aren't just clubs. They are signals to the underwriting department that you are part of an elite group with a proven track record of responsibility. The first and most obvious is USAA. Now hold on, I know what you're thinking. I already have USAA, or I'm not eligible. But this is where most people get it wrong. USAA's eligibility is far broader than many realize. It's not just for the service member. It extends to spouses, former spouses who haven't remarried, children, and even stepchildren. If your father, mother, or even your grandfather served, you might be eligible through them. This is a legacy benefit. Before you write it off, you need to do a deep dive into your family tree. Getting a USAA membership number, even if you don't buy their insurance, is like getting a key to a secret club. It's a credential. It's a number you can use to leverage deals elsewhere. Next, we move into the financial fortresses. Navy Federal Credit Union, or NFCU, and PenFed Credit Union. Many veterans already bank with them, but they fail to understand the power of that membership when it comes to insurance. These are not just banks. They are military-affiliated financial institutions with strict membership requirements. When you tell an insurance agent you're a member of NFCU, you're not just saying you have a checking account. You're signaling that you've passed a background check of sorts. You're part of a financially stable and disciplined community. Insurers know that members of these credit unions are statistically less likely to miss payments and more likely to be responsible individuals. It's a powerful form of social proof, and it can unlock what are often called affinity group discounts that are not publicly advertised. Simply joining is step 1. Leveraging that membership is step 2, and we'll get to the exact words to use in a moment. The third pillar is the Veteran Service Organizations, or VSOs. We're talking about the American Legion Veterans of Foreign Wars, VFW, and Disabled American Veterans, DAV, among others. Joining one of these organizations does more than just support fellow veterans. It gives you direct access to corporate partnerships. Major insurance carriers actively court these groups. They create special, co-branded programs with pre-negotiated rates that are only available to verified members. The discount might be listed on the VFW website, for example, But the agent on the phone might not know about it unless you specifically ask for the VFW member program with their company. The annual fee to join one of these organizations, often less than $50, can pay for itself 10 times over with this single discount. So you've done the prep work. You've secured your membership in at least one of these organizations. Now comes the execution. This is where you go from being a passive customer to an active negotiator. You are about to call your current insurance agent or a new potential provider. Do not use the online quote tool. You must speak to a human being. The online forms are designed to put you in a box. You need to break out of that box. When you get the agent on the line, you are not going to start by asking, "Do you have a military discount?" That is amateur hour. That question gets you a generic 5% off coupon. We are hunting for big game. Here is phrase number 1. Write this down. After the initial pleasantries, you say, "I'm calling to review my policy for all available discounts, specifically any affinity group and professional organization rates. For your reference, I am a member of," and here you list them: USAA and the American Legion. Let's break down why this works. You use the industry term affinity group. This signals to the agent that you are an informed consumer. You didn't just say military, you named specific high-value organizations. This forces the agent to look beyond the simple military checkbox in their system and search their database for partnership programs with those exact names. Many agents are lazy. This phrase makes it impossible for them to be. Now for phrase number 2, a sniper shot for a very specific high-value discount. You say, "In addition to standard discounts, could you explain your company's policy on garaging location discounts for active duty or reserve members? I have a vehicle that is sometimes stored on a secure military installation when I am away for training." This is a masterstroke. Most insurers offer a massive discount for a vehicle that is in long-term storage or driven very few miles, but they bury it in the fine print. By framing it around a secure military installation and military training, you're connecting it to a low-risk scenario they understand. A car locked away on a military base is one of the safest vehicles they could possibly insure. This can slash the premium on that specific vehicle by 50 to 75%. Ready for phrase number 3? This one reframes your military experience into a civilian qualification. You say, "During my service, I completed extensive advanced driver training, including emergency vehicle operation and defensive driving courses." Does your underwriting department have a process for recognizing this type of professional experience for a skilled driver discount? Boom! You just elevated yourself from a veteran to a professionally trained driver. You're putting your experience on par with a civilian who took a certified defensive driving course, which routinely qualifies for a 10 to 15% discount. You're forcing them to see your military skills as a risk reduction asset. Even if they say no, you've planted a seed. You've shown you are not a typical customer. The agent is more likely to dig deeper for you, looking for other ways to earn your business. Finally, phrase number 4. This is how you leverage your credit union membership. You say, "My primary financial institution is Navy Federal Credit Union. I've been told that members of military-affiliated credit unions are often classified in a preferred risk tier. Can you confirm if you have a preferred program or special rates for NFCU members?" The key words here are preferred risk tier. This is insider language. Underwriters group customers into tiers based on perceived risk. By using this phrase, you're asking the agent to see if your NFCU membership can bump you into a better, cheaper group. It's not just an affinity discount. It's a fundamental reclassification of you as a customer. This is the kind of query that can lead to a substantial permanent reduction in your base premium before any other discounts are even applied. I saw this work firsthand with a Marine gunnery sergeant out of Camp Pendleton. Let's call him Gunny Miller. He was paying over $2,000 a year for his truck. He was a member of USAA and NFCU but had only ever asked for the basic military discount. I walked him through these exact 4 phrases. He called his provider a major national brand. He used phrase 1, and they found a USA-affiliated discount they'd never applied, saving him $100. He used phrase 3 about his driver training, and they added a skilled driver discount for another $90. But the knockout blow was phrase 4. The agent put him on hold, spoke to an underwriter, and came back 5 minutes later. Because he was an NFCU member with a good record, they moved him to a preferred plus tier. His new annual premium? $1,400. A $600 a year savings from a 10-minute phone call. That is the power of using the right words. You now have the intelligence. You have the specific organizations and the precise language to execute this mission. You have everything you need to fundamentally restructure your auto insurance and unlock hundreds, if not thousands of dollars in savings. But there is one final piece of the puzzle, a critical vulnerability that almost everyone overlooks. Even after you've secured these incredible discounts, there is a single devastating mistake hidden in the fine print of your policy that can erase all your hard work. It's a trap that insurance companies count on you not noticing, and it can leave you financially exposed when you need your coverage the most. In our final part, we will expose this trap and give you the ultimate checklist to ensure your policy is ironclad, solidifying your savings for good. This trap is called the loyalty penalty. It's a quiet, insidious strategy, and it's one of the most profitable tricks in the insurance industry. Insurers have incredibly sophisticated software that analyzes your behavior. It knows how long you've been a customer, whether you pay on time, and most importantly, how likely you are to shop around for a better deal. If their algorithm flags you as a loyal, set it and forget it type of customer, the kind of person who values consistency and trust, sound familiar? It can trigger small, incremental rate hikes each renewal period. We're not talking about a massive $500 jump that would send up a red flag. We're talking about $20 here, $30 there. It's a death by 1,000 cuts. They are betting that the increase is small enough that you'll just sigh and pay it, chalking it up to inflation or some other vague reason. They are banking on your loyalty, the very character trait that defines so many in the veteran community, and they are monetizing it. It's a betrayal of trust. You believe you're being rewarded for your years as a good customer, but in reality, you may be subsidizing the teaser rates they use to attract new clients. You become the bedrock of their profit margin, simply because you didn't question it. That ends today. Right now, we are arming you with the ultimate pre-renewal checklist. This isn't just a list. It's your new standard operating procedure. It's the battle plan to make your policy ironclad and your savings permanent. First on the checklist, the annual policy audit. At least 30 days before your renewal date, you need to get your hands on your policy declaration page. This is your deck page, the summary of your entire policy. Don't just file it away. Treat it like after-action report. You need to read every single line. Start with your core coverages: liability, collision, and comprehensive. Ask yourself, have my circumstances changed? Is the liability coverage, that's what pays for damage you cause to others, still adequate? A common recommendation is 100/300/100, meaning 100,000 for bodily injury per person, 300,000 per accident, and 100,000 for property damage. If you have more assets now than when you first got the policy, you might need to increase this. It's the cheapest part of your policy to increase, and the most financially devastating if it's too low. Next, look at collision and comprehensive. Is the deductible, the amount you pay out of pocket, still right for you? If you have a healthy emergency fund, raising your deductible from $500 to $1,000 can create significant, immediate savings. But if a $1,000 surprise bill would be a major hardship, then that savings isn't worth the risk. Be honest about your financial readiness. Second on the checklist, the discount deep dive. This is where you go on the offensive. Do not assume your discounts are correct or that you have all of them. You need to proactively verify each one. Make a list of every potential discount we've discussed: your military affiliation discount, your multi-policy or bundling discount, your good driver discount, your vehicle safety feature discounts for things like anti-lock brakes and airbags, your anti-theft device discount, and low-mileage discounts if you're working from home or have a short commute. And don't forget the more unique military-specific ones, like an emergency deployment discount or a stored vehicle discount if a car will be garaged while you're away. Then you call your insurance agent and you go through the list one by one. Use this exact phrasing: I'm conducting my annual policy review, and I'd like to confirm which discounts are currently active on my account. Can you please verify that I am receiving the military affiliation discount? What about the multi-policy discount? My vehicle has X, Y, and Z safety features. Am I receiving the maximum credit for those? By asking for each one by name, you force them to look. You'll be shocked at what they might find. Sometimes these discounts simply fall off during a system update, or they were never applied correctly in the first place. This single phone call can uncover hundreds of dollars in savings. Third on the checklist, the competitor cross-check. Loyalty is a two-way street. If your current provider isn't treating you right, you need to know your options. Before you even think about renewing, you must get at least 2 competing quotes. This is non-negotiable. Start with the companies known for serving the military community: USAA, Geico, Armed Forces Insurance. But don't stop there. Check with other national brands and even smaller local insurers. Use an online comparison tool to get a quick overview, but then follow up with a direct quote. The key is to make sure you are comparing apples to apples. Use your current declaration page as a template. Quote the exact same coverage levels, the exact same deductibles, and the exact same add-ons. You need a precise one-to-one comparison. This isn't about jumping ship at the first sign of a better offer. This is about gathering intelligence. It gives you leverage. Knowledge is power, and a competing quote is the most powerful weapon you have in a negotiation. Fourth on your checklist, the negotiation playbook. Armed with your competitor quotes, it's time to make the call to your current insurer's retention department, not the main customer service line. Ask specifically for the department that handles cancellations or renewals. These are the agents with the authority to make changes to your rate. When you get them on the line, be polite but be firm. Start by stating your history. Hi, my name is your name, and I've been a loyal customer for 8 years. I just received my renewal notice, and frankly, I'm concerned about the price increase. Then present your intelligence. I've maintained a perfect driving record and my circumstances haven't changed, yet my premium went up by 12%. I've also done some shopping around, and I have a quote from competitor's name for the exact same coverage that is $200 less for the 6-month term. I would prefer to stay with you, but it's difficult to justify paying that much more for the same product. Is there anything you can do to match that price? Or at least bring my rate down to a more competitive level? Then be quiet. Let them do the work. They may put you on hold while they look for additional discounts. This is often where the magic happens. They know it's cheaper to give you a discount than to lose your business entirely and spend money acquiring a new customer. If they can't match the price exactly, ask them to explain why. Sometimes a small difference in price is worth it for superior customer service, but you deserve to make that choice consciously, not because you're being overcharged. Finally, the fifth item on the checklist, the hidden riders and exclusions scan. This is about making sure your policy is truly ironclad. Look at the add-ons, often called riders or endorsements. Are you paying for rental car reimbursement? If you have another vehicle in your household you could use if your main car is in the shop, you might not need it. Are you paying for roadside assistance through your insurance when you already have it through AAA or your credit card? These small $10 a month riders add up. Eliminate redundancy. Then flip the script and look for what's not there. Read the exclusions section. A huge one that trips people up is using your personal vehicle for business. If you deliver for DoorDash or drive for a rideshare service, even part-time, your standard personal auto policy may not cover you during that time. You might need a special commercial rider. Not having it could lead to a claim being denied, a catastrophic financial event. Understanding what your policy doesn't cover is just as important as understanding what it does. Executing this 5-step checklist every single year transforms you from a passive customer into an empowered consumer. It turns the tables. You are now in control. This isn't a one-time fix. It's a new financial discipline. It's about building a habit of vigilance to protect your hard-earned money. You serve this country with honor, integrity, and a commitment to excellence. You deserve to be treated with that same level of respect by the companies you do business with. You earned it. This knowledge we've shared is your tool to demand that respect. Don't just watch this video and forget about it. Take action. Tonight, find your policy declaration page. Put a reminder in your phone for 30 days before your next renewal date. Make this checklist your new annual tradition. You fought for our freedom on the battlefield. Now it's time to fight for your own financial freedom in the marketplace. It's a battle you can and you absolutely will win. Thank you for your service. Stay safe out there.